Hey guys, yep. So it's me again, and though it looks like it's not different, but yeah, that's it. But so as to not elongate the other video, I told you after the loss I had in the month of August, I was considering not to continue doing this. I felt like, just go and build yourself, get yourself to your goals before documenting your journey again. But again, I had a rethink, like, for accountability's sake, let me just do this so that I'll just stay consistent. So yeah, I'm back again in the month of September. Again, I'm your host, Timothy Alo. Some people say Alo, whichever. And again, this is the welcome to this channel again, the FX PhD or PhD FX podcast, or whichever way. I told you why. It's because I'm a PhD student, so it just makes sense. So yeah. And so the whole idea of this again is to be accountable, on my journey and how I trade, and to show you that it's possible. Again, I'm not a day trader. I trade it like an investment. So that's why I don't do more than 2-3 trades in a month, and I'm done. Really hypothetical. But here we are again. And so in the month of September was good, but because of my psychology in August, I just took a sit back and said, okay. You know why? The truth is, August was quite painful because I felt like I could have done something better. But in February, where I even took more losses, June, July, where things didn't go my way, but because it looks like those months where, how will I put it? It looked like the strategy was the problem. So I wasn't really bothered because I felt I did everything. But in the month of August, it looks like I was the one who did not do the right thing. So that's why it affected me that way. So now I was quite, okay. Just before we continue, you can see I have this here. This is how I enter my trades. I have everything calculated. Oops, sorry for that. So I have this. So I have 2 accounts I work on, personal accounts where I risk 20%. I put it there. So I'm risking 20% on it. Don't do it. Thank God I remember. This is not a financial advice, please. I'm just documenting my life. So it's really not, I'm not advising you to do the same. But on my prop firm accounts or challenges, which I think I lost one recently in August. So I think that's why it hits hard on me too. But my prop firm, I risk about 2% per trade. So if I were to go into investments, really, I would do 2% per trade. And I'm not, as a trader, 2% per trade would give you, you can make 50 losses without, or let's say, okay, with commission and all of that, you can make about 30 losses. How would you have 30 straight losses? So when I hear people, and I'm going to have a video on this separately, where people say, Forex is bad, is this, is that, I lost my money and I did this. Usually, I don't, with my current knowledge of Forex, I don't look at Forex as the enemy. Usually I look at the people themselves. I say, no, you were the one, who you're greedy really, because some people even risk 1%. And if you risk 1% to get 3%, I've seen a lot of traders that all they try to get in a month is just 2%. And with 2%, these guys are making it. So why would you say Forex is risky? So it's really painful. So because if let's say your minimum, you do a 1 to 2, that means you're risking 1%. You can make 100 mistakes. 100 mistakes consistently before you blow an account. But when people come and say, I invested my money with this firm, especially in my country, Nigeria. I know it's not restricted really, but I speak for where I know. And then they say, Forex is risky, that's why, and this and that. I do that too when I take money from people to invest. No, not invest, to help them. But if you want to invest, if I know this money means a lot to you, then there should be a way. Again, I'll tell you, I can't promise you more than 1% or 2% monthly. And me, myself, on each trade, I'm going to be risking about that same amount I'm promising you. So, and I try to get 3 of it. So I can keep 2 for myself and the company and logistics, and I'll give you your 1%. Then when we take losses, we'll let you know. I will tell you that probably in the next month we'll get you back. So, I think it could be very structured. But the problem usually is I don't want to touch on this yet, but the problem usually is many people, they just take your money and, they will first of all spend 50% before they even start investing, which is not so. So I'm trying to show you that I have my risk parameters here, and it's quite cool. So if you want to, you could copy it, but it's fine. So sorry, it's painful to see people lose their money. So I had the zone marked out. I did not take this trade. I just sat back. I said, okay, let me see if this strategy will still work. Notice we have the high of my liquidity time frame. I call it the pre-New York session. If it's above, the London session, then I feel okay for some little retracement. It should be in New York, and this pair does that a lot. That's why I love it. So I got in here with a 30 pip stop loss. Also, sorry, I marked it out. I did not take this trade, and I'll show you proofs. 30 pip stop loss, and it went my way, good and good. And so the second trade, let me just mark this out. The second trade too. So once this happens, now in my head, I'm not looking for a 1 to 3. It was painful, obviously, that now that when I did not take the trade, it went in my favor. In a way too, I said, okay, it helps my psychology and my data for the ideal case scenario. So I looked at this 1 to 2. It tapped in here. I was expecting again. Okay, I think you should understand now what I meant by that. 33%, I'd not feel it here, but I filled it here. So I waited. There was no fair value gap here. Let me zoom in so you can see clearly. So it tapped in, there was no fair value gap. Went down. At this point, I'll just take it here, or I could take it here, whichever works. So I think this was a 26 pip stop loss, but I was looking for just a 1 to 2. So I think I did 25. So 25 to get 1,000 or 100, sorry, to get 550 pips. Yep, that's it. So I actually entered on this one because it was a very narrow, very, very narrow one. Yeah, so I entered here. 1 to 2. So I think, that was 24. Yeah, 24 pips to get 480. It was very narrow, really narrow. So 240. So again, this I did not enter again. I mean, I was still like, is it gonna work? So when it worked, I was like, okay. Painful, yeah, but my strategy works again. So that means because of this, I could not use this particular pattern to go into a trade. So I had to, I told you I have another pattern now that I trade. But again, this is a good case of a good scenario. So let's go to the way I traded, that I still made my target of 10%. Hooray! But now I worked on my strategy a bit to ensure continuity. But so the next day, I think is this one. Where is it? Okay, it's this one. Yep. So this one, I could have taken this, but again, I've hit my goal using that strategy 1. Let's call it strategy 1 now. And so I did not take this. I just marked it in my mind. I said, okay, it still works. Okay. As we say here. So it's, got to 1 to 3. But so I started, I told you I've been testing a particular strategy for it to work. So I took a trade using that strategy. That was my first trade of the month, and it was a loss. So that was how I now had 5 losses. So let's go there. Now this is here. So what I do is I now look again in the 5 minutes time frame, just in the 5 minute time frame, to look out for is there an order block in that 5 minutes time frame. And yes, there is here. So what I do is I'll put this line to show this the order block. Now I've reduced this zone drastically to just this. Now again, this particular way of trading, does not give, from the data I have, does not give a lot of opportunities. I think in February there was no opportunity, so that's why I use both of them. But when it gives, I just take it a 1 to 5 straight away. So Yep, it did not give. So I, look at the price. Let's go. Or some people say other blocks, some people say demand, whatever. So I got in here, looked like it was going in my favor. I felt fly. Now I was going for a 1 to 5. And so when it's a 1 to 3, what I do is when it's a 1 to 3, I take profit. No, sorry. I put it into what's the word? When it's 1 to 3, I move my stop loss to break even, and so to allow the trade run, I'm then risk free. So that was the 5th consecutive loss. Now I was like, is this meant for me? No. I think my psychology was good at that point. I don't know. I just felt so good that this is gonna work. So now it came back into this zone, into this large candle. Let me draw it this way. Okay, so it came back into the zone, very large candle. So what was I looking for that day? The same strategy. Let me show you. So I had 2 other blocks. So let me go there. Some people call it supply and demand. You can call it support and resistance. I mean, it's the same thing, but I'm just looking at a smaller, block. So look at the first one. That's why I drew all of this. So my criteria is that I should have the candle should close well. Again, this is one subjective aspect that I throw you off, but it is what it is. So this is one. I was looking out for that one, and I was looking out for this one. Then, no, I think since it was here, this is quite subjective, so please pardon me. But I mean, I made money, so this was here. Yeah, so this was the one I went for. So I'll just draw this way. Let me delete this one. Oh no, let's go and see what happened. So so the first zone, so this zone, I could show you, I had a sell stop here to take a sell. I had another sell stop here, so it took out this zone. So I'll delete this one. It crossed through this zone, this other block, and then it got here. So again, confirmations, people call it different things. We could argue this is like a liquidity grab, blah blah blah, whichever. So when it got here, again, I think like the market maker, but for some reason I was looking at it on my phone. So looking at it on my phone, I did not know that the stop loss I drew was quite large. I mean, I think I just woke up because I have to do other things. So I just woke up. So I put in 12 pips, and you would see it from the chart, from the picture. So it was when I got to my laptop, I said, why did I use 12 pips? But eventually, so I put in 12 pips. I aimed for 12 pips should be 60. But again, I wanted to make up for the loss I took. So I said, no, I'll do 6, and I did 720. So I targeted 72 pips. But again, once I had gotten to 1 to 3, my trade was risk free, so I don't care. And again, I wasn't supposed to trade this, so I felt like, okay. So it went my way. But let's look at the real case, because I love to show you the real case. So what's the real case? The real case would be that I should take this at 10 pips, should be the real case, and then I'll have targeted 60 pips, and that would have been it. Or ideally 550 pips. Why I went for 6 was because I had taken a loss, so I wanted to make my loss back. So I'll make 5% and yet at the end of the month. So eventually I got a 5%, and I think I'll be using these 2 strategies together and ensure they don't. I have data supporting this, and so I think this is one thing I'll add into my portfolio. So I just have 2 strategies, not more, and this is how I'll trade. So that's it for the month of September. I hope to continue like this in October. Eventually I made some profits. You could argue that, okay, what if you have both wins? Would you have to make 20% till then? But I'm really contented with 10%, and I'm just like, if I can do that consistently, I think I'm gonna be good. So till the next trade, I think I'll engage this community better now, so you can see how I think, and we can have a discussion offline or on other medias where we can talk and discuss. Again, till the next video, have a good one. Bye. Yep, bye. I'm done.